Good morning, traders. Good morning, traders. Today is the 17th day of September 2015, and my name is Nathan. This morning, it's a few hours into the London session, and we had an interest rate decision by the Swiss National Bank a few hours ago, and we all know that the interest rates were kept on hold at negative 0.75. That simply meant that the economy is doing very well in the Swiss part of the world. So that said, I just want to show you guys exactly what I always show people. Simple setups, the market makers patterns, the formations, simple things that can only be seen on the 15 minutes time frame. And if you train your eyes to see this, you cannot unsee it. Guys, ladies and gentlemen, you have to be well versed with how to spot these patterns, not just looking at a historical chart and spotting them, but looking at it, looking at the market real time. You should be able to anticipate failures and so on and so forth. And backed up by volume, it pretty much makes a lot of sense, and it's more or less like a high probability trade setup. And these things keep repeating themselves, because if you're conversant with the daily cycles, weekly cycles, trading becomes enjoyable and fun. If you're trading and you're not enjoying what you're doing, then you need to quit trading. If you're trading and you're busy losing money, then you need to reconsider your approach and adjust something here and there, just like a car. Straight to my presentation today, I want to show you guys what we're talking about here. This is the dollar Swiss or the dollar franc, and what we saw yesterday was the same old patterns I keep singing about, I keep talking about, I keep trying to show people. As you can see, first leg AB, you can see the market dropped. This is yesterday, guys. Take a look. You can see this thing, these patterns keep repeating themselves. Look at that. Gave us the neckline, and then the market attempted to breach the lows and was unable to breach the lows. Exactly what we're talking about, guys. And this is where you need to approach this with, depends on yesterday's ADR lows. You need to know these levels with you. You need to probably back that up with volume. You can see as the market tried to build some momentum going up, it created a neckline here, and we had some low volume churn bars here. You can see low volume bars, right? And the market attempted to go down to this level at 96.72. It was unable to breach the low of the day, LOD, at 68, and as a result, we come in very fast, and bang, we pull the trigger and we go long for some nice 40 pips. Of course, we know the true range of the dollar Swiss. It doesn't move quite that much as compared to the dollar, euro dollar, single currency, and the likes of the crosses. So you need to be content with anything above 50 pips, guys. Ladies and gentlemen, you need to be happy with pips. You need to make positive pips and not negative pips, guys. What you're seeing here today is a repetition of what we saw yesterday, guys. I hope you can see. I have drawn for you the low of the day yesterday, and we can see clearly the low wasn't breached, and it held. And what we are seeing here is failure. This is what we call failure, guys. Failure for the market to breach the lows, and the market makers here are going to ride the market up above the round number 9700. What we're seeing today, guys, is after the rate decision, we are seeing the market made a drastic drop, and then the market, the market makers ideally have their low of the day. Despite the fact that the Swiss is very strong, doesn't mean that it will remain strong forever, guys. We look to buy low and sell high. The basic principles of demand and supply. And when demand is building up, we want to be in the side of demand, because we're looking to buy. So, guys, this morning what I did is that I spotted the same old pattern that was shown yesterday, and what I did is I pulled my trigger, bang, and I was in, and I went in flat out, and I'm very confident about this trade. I'm only eyeing the round number. For example, put up my round number Indy. As you can see, I'm eyeing a break above the 9700 round number before I can place my stop at break even. You see, I will only move my stop at break even if I'm on a profit of plus 30 pips or 40 pips, and I will introduce a stop at break even and let the trade run. However, if I'm conservative and I don't want to let my pips fly away or leave me, and this is all trade management, I will obviously place my take profit at the required true range according to the pair that I'm trading, and I will probably go for about 550 pips, 50 pips, or 50 pips, because I know the odds of the market running more than the true range is a bit is unlikely. So I will just put my take profit at 97.30 for some cool 55 pips or so. Guys, simple trading. You need to enjoy what you're doing and have fun. So in this case, I will cancel my take profit. I don't want to have a take profit here because I know that the market has enough room to rally to the ADR high. So guys, I'm talking about my targets. Intraday will be at 97.61, and that will give me some nice risk reward, and it will give me some nice 85 pips of profit. And look guys, you can see the market is popping up, and this is fun for me to watch, and I hope it is enjoyable for you as well, and you're learning a few things from my videos, and I hope guys can actually perfect the art of trading. It's a skill. You have to train your eyes to see what majority of the retail traders don't see, because we know when there is good news for a currency, retail traders tend to sell into the news. But however, we do not trade in the side of the news. We look to go against the retail traders. Like I always say, trade against the retail traders and you will profit very, very easily. So guys, you can follow this trade. Today is the 17th day of March, September, sorry, and the time now is can I get this up and running? Where is the time? The time now is 1 p.m. Kenyan time, and we can have a look at this as soon as just before the news comes out at around 3:30, the unemployment claims, and we can see where we'll be. And prior to the news, we will exit our trade because we don't want to take chances, guys, unless we have a stop at break even. Ladies and gentlemen, it's been a pleasure hosting you guys. This has been fun making these videos, and I'm hoping that some of you are learning something from my videos. And feel free to press the subscribe button if you want to learn more from me, free of charge. Nothing is meant for somebody to pay here, so just learn. And let's look at where the market will be. And as you can see, we are expecting some breach of this 9700 psychological level. It's a round number, guys. We know what round numbers are. They provide resistance depending on where price is, and they will provide support. So as soon as we have the breach of the 9700 psychological level, I will probably place my stop at break even, and I will let the market run with me into profits, and I will smile, and I will be very happy and very psyched up for the weekend. So guys, today is Thursday. Have fun. Let's be cautious as well as we approach the FOMC at later on in the day, and have fun trading. Just be cautious, get what you can, and just be content and play safe, guys. And it's been nice hosting you guys, and second time I'm saying this, but however, I had 10 minutes for this video, and almost 10 minutes is almost done, and I want to wish you all the best in today's trading. Be very safe, and always be very happy, and I will look forward to making more videos. Hopefully some of you can learn something. It's been nice hosting you guys. Cheers, have a nice Thursday, and I will talk to you very, very soon. Goodbye.